Good afternoon, everybody, and welcome back to the Schwab YouTube coaching channel for our next topic. It is After the Close, and I'm your host, Kevin Horner. Thank you all for being here. Today, we have seen a bit of a breakout to the upside following yesterday's FOMC decision and rate cut of 25 basis points, and we will see to what extent that really rolls and continues tomorrow, but we did have some optimism for much of the market at the final finish today. But today and after the close, we're going to work through our standard scans as we often do here. We're going to look at the 20-day moving average pullback scan. We'll look at the 50-day moving average pullback scan. And of course, our example portfolio, which means we have a lot to get to as per usual. So let's get to business. Say hi to James Boyd in the chat. He'll make sure that y'all stay in line today. Not that that's a concern, but you can follow JB and me on X as always, James Boyd CS, Kevin Horner CS. And don't forget, while I might be traveling to Dallas tomorrow morning, JB will be online live and ready to rock and roll at Market Open with you all for Trader Talk, our ETF segment. Remember, that is a live-only session. You need to be there and at Market Open if you want to watch that one, everybody. So make sure that's on your calendar. All right, let's look at our disclosures so that we can get into it with you all. Remember, our conversation is exclusively informational and educational. We do not make recommendations. We do not endorse a specific approach to trading the market. It's important, though, to remember that options carry a higher level of risk. These are not appropriate for all investors. You do need to be previously approved in order to trade those options, so make sure you go through the requisite steps to attain that approval. Each account in which you might like to trade options does need separate approval, and you'll want to be familiar with the characteristics and risks of standardized options. We'll talk technical analysis as usual here in this segment, but remember that that is merely a piece of your decision-making puzzle, and we discourage you from making your decisions exclusively off technical analysis. Last note as it relates to the option side of things, by the way, remember we work in a paper money version of our Thinkorswim desktop application, and anytime you are the seller of options, you need to know that while in paper money, you will not be early assigned on a short option in paper money. However, in real life, this can happen at any time. That means that the moment you sell an option to open a transaction, selling a call, selling a put, you could be assigned even if that contract is out the money. So you do need to keep that in mind whenever being the seller of options. All right. So with that, let's get right down to business. We're going to actually quickly just touch on the movement in the SPX today, which did close at a pretty good level, a new all-time high, as it turns out, on a closing basis, 66.31. Some of you will make note of the fact that that close basically came at the open trade. So we opened at 66.27 or pretty close to it, closed at 66.32, about a 5-point up day from the open to the close. Otherwise, it looks a bit like a spinning top. We did not push the market one way or the other. Yes, it's a new all-time high, but we didn't break and hold. So if we'd have seen this candle filled in at the close, essentially closing at highs, bulls would have perhaps been a little bit more optimistic about what could be coming tomorrow. But nonetheless, a new intraday high, good close, following that 25 basis point cut from the FOMC yesterday. We did get, of course, an update in the NASDAQ as well, almost 1%, a similar area of detail here in the sense that we did not stay at our elevated highs. We did close at a new high once more in the NDX. But the big move was amongst the big three indices was the small caps today, which you might expect, being the most interest rate sensitive. We got a new short-term close at highs, and in fact, that is a real nice development for the small caps. I could probably take this line that I have drawn in as potential resistance and just move it up to where we basically finished the day today. This is the high we had achieved in November of last year, and we are right back to that level, which is right around 2460. So I could just make a quick alteration, and let's just call it that 2460, and then this will find itself at the 2460 level. So that's kind of notable, everyone, because look at this on a weekly chart. Actually, let me do this real briefly. Let me just go back to my daily, and I'm going to save my drawing set so that I can eliminate all of the draw details on this weekly one, and that'll help us see what's going on here. But boy, that is one heck of a deep V, isn't it, everybody? I mean, goodness gracious, all the way down and all the way back. So perhaps we're looking at a point where the small caps need to consolidate a little bit, need to pause a little bit. The downward move was about 30%. The upside, of course, the inversion of that turns out to be about 43% at the point that we've made here. So, could we continue? Sure. But traders need to be positioning as though they're comfortable, right? Regardless of whatever move happens next. Do we get a pullback? Do we consolidate? Do we get a breakout? Whatever that might be, make sure that as traders, we're properly positioned for comfort every step of the way. It's a very important aspect to being able to stick with your positions as long as possible, of course. So we've had some bullishness, and as such, we're going to lean in to bullish opportunities that we have for consideration. And what we've been doing here, everyone, for building our example trades, we've been relying on two of our scans, a 20-day pullback in S&P 500 stocks or a 50-day pullback in S&P 500 stocks. So I thought, as is often the case, let's go ahead and just work through. Maybe we could find a position or two to briefly put on for an example trade today. And then we will finish out looking at our example portfolio, which already has some positions that do need to be addressed as we head towards Friday morning's open. So looking at the 50-day pullback, one of the things that some traders just like to do, making sure that we have, one, our chart lined up with our watch list. So I've got the purple number 5 assigned to both the chart and the watch list. And then I'm just going to click on the one here. It happens to be NVIDIA, which we've traded a little bit in the past, but we've not been back into it, as you can see, for example purposes. And it's a little bit of a notable spot. We're right at the 50 and 20-day confluence there, but we haven't necessarily broken out. And some traders would say we need to trade above this brief short-term downtrend line. Other traders would say, look at the support at 168. We bounced there once again. This looks more opportunistic, and you're right in the middle of it all, right? Basically 168 to 183, a nice 15-point range, and here you're in the middle of that range, right? Smack dab in the middle of it. So upside is about the same as your downside right here, which does continue to be a little tricky. So, in terms of starting a new position, maybe not ideal from an example basis. So let's just take I'd like to take my arrows and I just work my way down the list. And I'm looking for things that jump off the screen. And boy, I got to say right here, this is maybe one that jumps off the screen a little bit. Let's briefly talk about why and how we could give consideration here. Now, I'm not familiar with the stock. I note that this price is a little bit cheap. It is under or right around $10 a share. But the thing that immediately jumped off the screen at me on this chart, everyone, is prior resistance. In this case, the highs following a big gap move based on an earnings window. So here you have earnings, right? And that earnings move is what led to this big gap. And we've been working our way back. Now, the stock rallied really well following the last earnings report here in early August, pushed to some area of resistance. I have to call it resistance because we basically went sideways in there for about 6 sessions, couldn't get through that $10.80 ledge and retreated. But where did we fall back to? Some traders would say we fell right back to that prior area of short-term support. It wasn't the white line that I drew in, it was this ledge right here. And so that's a little bit intriguing for some traders, and perhaps bulls who are wanting to participate here could build a long equity position or even a bullish call spread, for example, where they would look to participate for the opportunity to get right back to that $10.80 or $11 a share, or even move through that $11 a share. What's nice about this at this point is very simple, a proper risk versus reward here. Meaning if the trader who wanted to take shares was a buyer at say $10 a share and moved on a close under 9.5, they'd be risking about 50 to 60 cents a share. And if they are a buyer at 10 and a seller at 11, as an example, just using some round figures here, well, then you might be looking at maybe risking 50 cents to make a dollar of risk for $2 of opportunity. That could fit some traders' risk reward scenario. So some traders might be looking to get started on a new underlying share position in lieu of an option trade here, just based on that potential for risk versus reward. Let's keep working our way down the list, though, and see if anything else stands out. And remember, sometimes what we're looking for is just the involuntary reaction to the chart. I'm looking for something that jumps off the screen and wants me to be involved. I'm not yet seeing enthusiastic charts, but this one doesn't look terrible. You certainly have been fighting it out at the 200-day moving average there. There's a bit of confluence here now with the three moving averages, the 20, the 50, the 200. And then some traders would call out again a throwback to the support test, which does for some really strengthen this 304 level. Maybe it's more comfortable for some of you to consider the 300 level a little bit of a round figure. Maybe that offers up some insights. One other thing I'm noting down here, everybody, well, actually two things. Number one, volume has been a bit more substantial as we've been going back and forth after having broken through this resistance area. We could also maybe apply a moving average of volume here. So let's see, volume average, there it is. I'll put that in the same volume pane here. And so that's going to give us that horizontal line through the spikes. And that can be important because the big reminder is that usually average retail traders like ourselves, we can't push volume like this. These days, when the stock was in the pullback mode to find support, big spikes in volume, this is very, very unlikely you and me and the average retail trader participation. This is probably our institutional traders. But if we get moves through the upside that are accompanied by volume spikes in excess of the 50-day average of volume, that can be instructive. All right, so keep that in mind. So still, Zebra, not exactly a scream for us. Let's look at Cisco. Well, this is a little different, everyone, because you've got a bit of a uptrend already in place. We saw that we've worked well off the April lows back here. We are above now all three of the major moving averages, right? So check this out. Not only above all three major moving averages, but what once was prior resistance up in here then became support once more. So maybe traders are feeling a little bit more opportunistic here. Now look at this, volume also getting through that 50-day moving average. Not exactly a screaming indication with today's volume. Not a big volume bar like we got back here where we broke to the upside through resistance on huge volume. That was a bit of a heads up, but it is an improvement. And it could be pointed out that if we zoom in a little bit, that yesterday's high or yesterday's close, you could pick a couple of these days in here as your low day. Really, the low day was this day here, right? And the high on this day was 67. And yesterday, we closed at 67.72. So we did get yesterday a hold move, a close above the high of the low day in the pullback. And then today, you got continuation. This might be something where a new trader is willing to step in and build an opportunity for upside momentum. And why? Leaning into the fact that this is Cisco, and we saw what move the semiconductor group made on its own, at some point today, we might consider more opportunity here. So, as usual, if we're thinking bullishly, we can go very standard, buy some shares, maybe put a stop order beneath the white line that I will change to green so that we can define it as support. And that might make sense for the long equity trader who wants to be moving out of their shares if they are wrong. But there's maybe an opportunity for the bull call spread, essentially a long call vertical, maybe buying up a call that would allow you to profit if the stock moves through, say, 70 to the upside, which may make some sense. You can see that we'd had pulled back from this level previous. All right. And this was just shy of $70. Okay. So right in that realm. Now, I see what you're talking about, Zink. Absolutely. Could it be? Everything could be, I suppose. But I think, when you take a look at this action above the white line that I could extend, and I'm going to change the color on because it is near-term resistance here. So let's make that red. There we go. So yeah, I see what you're talking about, of course, because we do have a little bit of kind of like an island up here after the with the earnings maneuver. Now the earnings are what led to the island move lower, which tells us the importance, of course, of $70. But the head and shoulder scenario has to break to the downside in order to be valid. Reminder that we call them potential patterns until the patterns come to fruition. So I understand the potential for that to be considered an inverse head and shoulder, sure, but we would have to trade under $66 on a closing basis to really validate it as such. Right now, it seems like it's more of a consolidation with just the quick return to the bottom of that channel following the earnings. Instead, if the earnings were terrible, you might have expected to see this back to the 200-day moving average, and instead it held up at that 66 former resistance now can become potential support. So why don't we give thought to a long call vertical where we maybe pick up the long call that's in the money, which will be a higher delta and give us a greater likelihood of having potentially assets or dollars remaining in our long call spread after expiration. Reminder, you don't have to do it that way. Many traders will go forward and start buying the call that's out the money, but I want you to be considerate. Remember that when you buy options out the money, you're buying a lower delta, and that means that you have a lesser likelihood of the trade working in your favor, and you have a lesser likelihood of the option you're buying being in the money at expiration. So those are some considerations when thinking about options. So let's go ahead out a couple of weeks. We're going to give this one 2 weeks at least. It'll take us to about October 3. And what this we might look at that $65 strike. Now, again, I selected that for a reason. It's in the money versus horizontal support, which I will just peg here at $66. Okay, so there's 66, and then above us is 70. So I'm going to duplicate that and just to give myself something to watch when I'm thinking about my range here. So when we're thinking about a potential spread, remember that if we're thinking $5 spread, 65 to 70, our max opportunity is the distance between our spread. All right, the 65 to 70 is a $5 wide spread, and meaning we could make 5, but we have to incorporate the cost to put that on. So if we buy the 65 call for approximately $4 and were to sell the 70 call at approximately 60 cents, our net cost would be $330 to bring in $170. Now, not everybody's going to look at that and say, yeah, that's perfect, Kev, because they're going to be spending maybe more than they expected. So I'm just going to mention, and I will point us to, let's see here. There we go. Now I'm looking at my proper column. So the 65 strike has a delta of 88 cents. That means that we are looking at a very high likelihood of that $65 call having intrinsic value remaining at expiration. Even if the trade doesn't get through 70, which would be the ultimate goal, we could still have value remaining at expiration on our long call at the 65 strike. That's what that 88-cent delta can imply. An 88-cent or 88% likelihood of being in the money on October 3rd, okay? Additionally, we can expect this contract to go up or down by about 88 cents currently for a $1 up or down move in the price of Cisco, okay? So that's one way to consider that. And then notice the 70 delta, the 70 strike has a 34-cent delta. And that tells us that we have about a 34% chance of this trade getting to max gain. And max gain would be achieved at 70.01, essentially on expiration Friday. So we'll put that one on for a 330 debit. And in fact, we're going to have to go a little bit up. If you're not if you have been in this class before, you've heard me state that one option we make available is the idea of what I call a padded limit purchase, which is simply giving the stock an opportunity to move a little up in our favor before the open so that we can make sure that I can't make sure, of course, but we increase the likelihood of being in this trade come tomorrow morning, which is our goal, right? Market's closed. We can't enter an option trade right now. So the best case scenario is buying tomorrow morning. Now, if we can go in at 330, we could go in at 3, or if we want to increase our chance to build that trade at the open tomorrow, we might need to go up. And so I'm going to go up to take us to 350 as it turns out. And that's just going to be to weather any upside optimism tomorrow morning that maybe pops the stock a little bit higher and we still want to participate. We want to take advantage. This will give us the better opportunity to do just that. All right, so 350 limit, and reminder, again, $5 spread. Our cost is $350. We can make the inverse of that. $150 becomes our max case scenario. Some of you might say, I don't need to spread that off. I don't need to sell the 70 call. Working with an 88-cent delta might give you that comfort, but that we are just using this to reduce our cost, tie us into a risk-defined best case and worst case scenario on this trade. And we're going to go to a limit of 350 for tomorrow morning. All right, there's that one for you, everyone. Let's keep on working down the list. Let's get at least one more, and then we'll look at our example portfolio, because I'll tell you what, we've got some really intriguing trades that have gone on since the last time we spoke. So here is Tractor Supply, which seems to have maybe found support along its purple 50-day moving average here over the last week. Now, some traders want to wait till it gets back above that 20-day. Maybe not. You have better risk reward if you are a buyer near support, right? But not everybody wants to be a buyer near support. Some of you want to be buyers into momentum. And I'm going to show you why you might want to be buyers into momentum. Here's another one that's kind of interesting from the recent pullback standpoint, right? Pull back to horizontal support. Also happens to be coincident with that 50-day moving average right about there, right? And today looks like it is a close above the high of the low day today. So some traders might get busy on this one, right? Maybe we could build a long equity position here. Again, thinking risk versus reward. If we decided to move on from this trade under $51, for example, and we are targeting the prior highs at around, say, 58, well, then maybe we're risking about $2 to make 5, approximately. Again, I'm just giving you a wide range there, but that fits into that risk versus reward standpoint for what an equity trade might work in terms of risking $1 to make 3, or risking $1 to make at least 2. So thinking about that, I could certainly see positioning a long equity trade here. Let's consider that on as long as the stock is above today's close. So let's say we're looking for a buy stop order that essentially says if we make a new intraday high or a high over today's high, that we should be into it. So today's high was 53.26. So let's say, let's say we go to 53.30, which I will admit is not a big move through an area of resistance, but it would get us in kind of quickly. Traders, you might want to move, make a buy like that based on a percentage amount through an area you wanted to be a buyer at. So some traders might say, all right, I want to be a buyer at 53, but I want it to be 1% through 53, which would be 53 cents above 53, of course. So they would then look at 53 and a half, 53.70, something like that. My point is simple, everyone. Have that idea. Does that matter to you? Does it not? Do you want some semblance of confirmation? Do you not? So we're going to just simply build this at 53.30 to be in on a stop order. Okay. Remember that when you buy with a stop, no guarantee of price. It will basically say if it trades through that level, you will be a buyer. We just don't know if it's going to be close to your stop or at a much higher price. It absolutely could be at a higher price. We have to be comfortable with that. So let's do a buy custom with one cancels other bracket. We will call that a stop for tomorrow's day only. So if it doesn't rally in the open or quickly through our 53.30 estimation, well, then you will not be put into that position. I am going to change my exits to good till canceled, because if I get put in that trade tomorrow, I need to give enough time, or I need to give myself the protection for the next, what amounts to 180 days. 6 months, of course. So we'll do a sell limit at that prior high, approximately 58. And again, in these examples, everyone, remember that you can be as precise as you want. I'm merely focusing on process. And some traders don't like to use those round figures. Since we're working, once again, as an example basis, I'm less concerned with that. I want to focus on process. So process is what led me to, hey, we found a bounce at support. It's a potential to hold. $1 of risk for $2.50 of upside, etc. Those are the things we want to focus on here. And then again, our stop exit, we're going to go for 51. And once more, trigger at 51, market order to sell thereafter, does not protect us on gap maneuver. So if we buy tomorrow at 53.30 and close, as long as it closes above 51, we're going to hold it, right? Or above 51, below 58, we're going to hold it through the weekend. But if Monday morning we opened at 45, and that our stop order would trigger at 45 at that open, and we would get execution close to 45, not likely close to 51. So please be aware of that risk. All right, let's go ahead and send that one off. Make sure we're correct. Buying 100 only if we trade upward through 53.30. We'll put an exit at 58 on those shares, or an exit at 51. Only one side of that can execute, everyone. All right, there we go. Now, earlier I mentioned that some of you like to be buyers near support. And some of you like to say things like, I can never buy a breakout. And I have to give you instances where breakouts work, just so that I can help you understand the way markets work, the way trends work. I got to give you a few from a space that I've been watching, and a space that I'm sure some of you have been paying attention to. How about this IonQ in that quantum space, quantum computing? We had a resistance band here at 48, and we worked through it with a huge candle on the 12th, which wasn't that long ago, by the way. So we're going back to last Friday, and the stock closed at a new all-time high. And now, just out of curiosity, how many of you, by show of hands, go ahead and throw that purple hand, that pink hand into your chat here. How many of you have looked at things like this previously and said, close at an all-time high. There's no reason for me to buy it there. It can't go higher. How many times have you said that? Right? Raise those hands. I know you've said it. Okay? And we need to challenge ourselves to avoid missing out on opportunities. Are these going to work out every time? Absolutely not. But if we don't take our opportunities, we will not be provided the opportunity to take profit. Now, does that mean that this is a screaming, I should have been in this, it's too high, right, Will? No, but again, if you're a trader and you have seen this play out a number of times in the real world, well, guess what? It reinforces the fact that it can go in your favor, okay? And therefore, you need to be prepared. And what's the best way to be prepared? Watching these charts, drawing your lines, making notes to yourself, reminding yourself, breakout through this level could be significant. Should I buy on this? Some of you will say, I can never do that. And I understand it, but I'm going to challenge you to try doing it the next time. You don't have to do it with a full position, whatever that is for you. You can do it with a partial position. Maybe you have a rule set that says you only buy 10% position size on breakouts to mitigate your risk, right? Don't let opportunity pass you by because you are scared or stubborn. Utilize a defined process for your trade. Build in your risk parameters. If you're wrong, move on quickly. And if you're right, work to stick with it as long as you can. So here's an excellent example of a stock just moving through a level and taking the lid off and rallying like mad. This one to the peak today went up 47%. That is a week's worth of move. Technically, that's about a year's worth of returns in a week of time. Okay? We have to get over those psychological barriers. Again, it doesn't have to be full position size. I'm going to give you another one. Happens to be in the same space. How about Rigetti? Anybody been watching that? I mean, here's another that took the lid off, everyone. Look at this. Let's highlight, let's show these, remove my trades, remove my orders. Look at that. Took the lid off resistance at 18, promptly went up 45%. Now, I know many of you are saying, my goodness, why am I not doing this? Well, it's that fear factor. We got to be prepared. You need to eliminate fear. Okay? The best way to eliminate fear is to participate. And it's also, again, important to go with proper position sizing. We are only talking examples here, but for all of you, right? I can't tell you what is right for you in terms of size, dollars, risk factors, etc. Your job is to define that specifically. Give it every bit of detail you need. Give yourself that playbook and then follow the playbook to the letter. That should give you the confidence to participate. All right? These are the types of moves that we wait for. We are looking for. Okay? We've got to be prepared when those opportunities come. Another one made a very similar move last week on news of an engagement with Microsoft is Nebius. Nebius now today having a quiet day, only up 4 pennies. But what's interesting about this is that it got that explosive move and then it didn't sell off. I mean, it sold down a little bit from the ultimate high over 100. It brought it back to 86. So yeah, there was a $15 and 15% drop. But what did it do? It held its gap. Held the gap, 100% so far. Yesterday, or maybe today, getting a hold move. Could there be more? Potentially. Okay, now again, I'm not utilizing these as an example of things you need to be taking opportunity for, but I do think it's an excellent example of why traders consider breakout opportunities. And again, my job is to remind you of the things that we can do as traders. Build that process to take advantage of these opportunities. Your preparation will be key to your comfort in taking those chances when they come. Okay, so make sure you do just that. Build that plan. Okay, let's look at our example portfolio. I've got some great positions on, great in the sense that we can look and consider taking profits. We're going to start with the CrowdStrike one here. So I'm going to tap my number 5 so I can put that in the chart. We built out a 430, 460 call. We've basically looking at about 72% of profit. Expiration is a ways out, everyone. It's a month out, and we're looking at 72% profit. This might be one where we can look to cover tomorrow. If we could get to 100%, we might be able to cover that quickly. This could certainly work in our favor. Because right now, by the way, this candle, just massive candle today. What an exceptional development after having broken the downtrend line. So huge candle, lots of institutional buying there today. Troy, I love that comment. Yes, it can always go higher. That's why breakouts are very frequently considered by traders with comfort, with familiarity in placing those trades. So CrowdStrike could be one we look to cover. Remember, our details here are essentially well out the money. We bought a 430 call and sold a 460 call. Ultimately, we can gain the additional value from this position, that additional 27.74%. We can get that as long as the stock remains above 460. Given the move we've seen today, I think a lot, did I say 460? Yeah. I think a lot of traders would consider sticking with it. So we're going to probably, from our example portfolio, maintain this in the hopes that we can garner that extra 20+% here. And the reason really is the stock's low of the day, the gap ledge, is right at our short strike price. So this is ultimately going to act for us as support both for the stock and for our position. Maybe next week we consider looking at this for a closure. If this gets up through and makes new highs, there's a chance that we could start to see some of that extrinsic value start to whittle away. Remember the difference between intrinsic and extrinsic. Intrinsic is everything in the money. Extrinsic is everything else. Essentially, for the majority of the time, it's time. It's what's left. And so we got a month to go. That's why this one here has why we only see about 70% profit, right? So just bear that in mind when thinking this through. How much time remains? Where do we reside in the channel or the chart to validate the trade? We are up more than $1,000, but we could still do a little better. So we could choose to close it out. We're going to let it go and see if some of that extrinsic value falls away next week. We also put on a Globe Life position that happens to be working. Our profit is a little bit, only 2%. Not a whole lot of action necessary there. Let's look at Allegion here. We're going to put that in the queue. So we're up about 6%, $1,000. Let's see how this one looks. We do have an exit already. I got to put my orders in and my trades back. So let's see where we are. Okay, we have made a new high and we have a stop way down here. So we're going to need to make some adjustments, everyone. Could we be taken out real quickly here? We absolutely could. But remember, we built this. We bought the shares on a breakout and said, hey, I think this might continue. So it has continued. What we have is a 50 share sale opportunity at our upper limit, meaning we're looking to take a little bit of profit if we get there. And our stop order is fully protecting us on I say fully, in the sense that it's on 100 shares. Obviously, it can't guarantee price, so it's not fully protecting. But if we want to raise our stop, and I think this is a nice way to kind of round out our discussion today, let's incorporate the average true range and the 20-day moving average. And because the 20-day has been support, right? We pulled back to it here and basically hugged it for a few days. And now many traders would say horizontal support, coincident with the 20-day, looks good. So maybe traders want to move on under the 20-day on a closing basis. And some would say use the 20-day moving average and go beneath it by the amount of the average true range. At this time, that's $3, and let's round it to $3.20. So under 172.31 by 320 takes us down to 169.11, right? So let's go under 169 for our new stop. And I'm just going to push this up like so to just under, 169. It's 168.84. That's 16 cents beneath 169. That gives me a little bit more comfort that I could sustain some drawdown and still stick with the position. So I'm going to move it up to there, hit send, and now we've got the whole thing established once more. By the way, one other thing I recently learned, we know we can manipulate our individual orders just by clicking and dragging, right? Like so. But did you know that you can actually manipulate your entire bracket by getting in between it here in the margins and taking it like so? Look at that. You can move the whole thing if you choose. So if you've developed a range that you prefer to work in, you can choose to move the entire bracket, which I thought was kind of a cool little feature and function. So with that, everyone, we're going to go ahead and wrap it up. That gave us quite a lot of topics for the day. We did hit the major indices. We looked at the SPX. We saw the NASDAQ 100. We also saw the Russell 2000 moving to new breakout levels. We did a little review of our 50-day pullback chart, or 50-day pullback scan, I should say. I did see a question in here. We absolutely can share that. So I'm going to quickly go to the scan tool. I've got it in there as the 20-day. So I'm going to load my 50-day pullback, and in the S&P 500, hit scan. I'm going to share that with you all here just by doing this. But quickly, and I do mean quickly because I am at time, basically what we're looking for are stocks that were at one time intraday below the 50, but closed above it, and are also exhibiting a 50-day moving average that's above a 100-day moving average. So we're essentially finding stocks that are likely to be in uptrends. Let me go ahead and put that here into the chat for you all. Please remember that when we share grids, when we share scans, when we share scripts like this, they're not guaranteed for timing. They're not guaranteed for accuracy. They are not a recommendation for your use, but I'm happy to share it with you. Hopefully that's helpful for you, Elite. Now, with that, I appreciate you all joining, participating in the segment. If you liked today's discussion, hit that thumbs up button for me down below. We're going to get this reviewed into the archive, and that'll absolutely help me out a little bit on replay. But I thank you all for being here. Follow me and JB on X, James Boyd CS, Kevin Horner CS. And if you're going to be in Dallas, I'm flying out tomorrow morning. I look forward to seeing you there. Can't wait to shake some hands and take some pictures. So with that, have a great Thursday, everybody. I look forward to catching up with you all again real soon.